Okay, we're going to get started. Welcome to the Pennsville Town Watch and Community Pride Flood Insurance Awareness Meeting. My name is Diane McAllister, Chairperson. It all started with the Bigger Waters Act. The Bigger Water Flood Insurance Reform Act of 2012. The Bigger Water Act extended the National Flood Insurance Program for 5 years while requiring significant program reforms. The first part of our meeting will consist of professionals briefly explaining their area of expertise relating to the flood insurance issues. We anticipate 40 to 45 minutes for this portion of the meeting. Part 2 will be the question and answer session. We will start by listening to flood insurance issues affecting the local real estate market. At this time, I'd like to introduce Teresa Canizero, Realtor with Berkshire Hathaway, located in Mullica Hill.
Good evening. As Diane said, I'm a Realtor with Berkshire Hathaway, Fox and Roach in Mullica Hill.
We're not professionals.
I've seen the value of homes in Salem County go down over the years, and especially recently. With over 10.5% of the homes in Salem County having to pay flood insurance, we're sure to see that number to go up, and with the new maps, and I'm sure we're all concerned. I've sold many homes over the years that required flood insurance, and most times the buyers didn't complain. But over the past couple of years, things have changed dramatically. Buyers now ask to only see homes that are not in flood zones, and our listings highlight the fact that they are not in a flood zone and that flood insurance is not needed. I have a number of listings that require flood insurance. Those listings get very few showings, and when there is an interested buyer, they find out the cost of flood insurance, and most have backed out. I've had a buyer recently that negotiated with for a home in Pennsville, a couple blocks from the river, and when they found out the quote for flood insurance was $2,500, they considered it. They decided against buying the home and withdrew their offer, knowing that eventually that price is just going to keep going up. So thinking about it, paying $200 a month for flood insurance, if you can use that additional $200 to buy more home at 3.5%, that gets you another $45,000 in a home. So buyers today looking at a home, $150,000 range, requiring flood insurance, could buy a home in a $200,000 range without flood insurance, and that's what most buyers are considering. That's just one of the buyer problems. We have seller problems. My parents, for example, they live in their home for 50 years, located 2 blocks from the river in Pennsville, a town where it's hard to sell as it is. They have an 1,800 square foot home. They've maintained it. Back in October of last year, they wanted to do some minor updating and asked to get a small home equity loan of $20,000. They were told they needed to get flood insurance. They hadn't had it for years. So they were anticipating the amount that they needed, maybe $200 a year for flood insurance, like they had when they had a mortgage on their home. They were told to get an elevation certificate. They did that, and they got a quote for $2,200. So a couple months ago, I went to the meeting in Mannington, where I talked to a number of people. After reviewing my parents' elevation certificate, I was told that the new maps would help lower their rate if they would move their heating system up 2.5 feet, 2.7 feet, add 1.1 feet of fill dirt to the crawl space, and add 7 vents. We've got estimates for that, $6,000. Needless to say, they didn't do the updating on the home, and now I'm wondering, how am I going to sell this house to another buyer, especially in Pennsville, who's going to want to buy it with the insurance rates that high, with not being able to update the home that they need. I have other clients asking the same thing. I had someone call me a couple weeks ago, asked if I had any suggestions for them. It's an elderly woman on Social Security in a home worth less than $80,000, and she was currently paying $2,200 for flood insurance. She got her new policy this year, it's $3,600. She has a small mortgage on the property, and she's seriously thinking about just walking away. Her comment to me as we were hanging up, who in their right mind would want to buy my home? I have investors who also are looking at homes. The first thing they tell me, don't look for a home in a flood zone. If it's in a flood zone, don't even send me the listing. I just don't know what to do to help sellers anymore. That's our job, to help you sell your homes, to help buyers buy their homes. There's a few statistics that I found. There are 2,100 insurance policies in Salem County. That's 10.5% of all homes in Salem County, which doesn't seem like a lot, but if you think about 2,100 policies that are getting too high, 10.5% of homes that just may not sell. Thank you.
Our next realtor will be Dave Wright from River Beach Realty. Actually, he's the owner of River Beach.
Looking around the group tonight, it seems like this is a major problem everybody's concerned about. That's why we wanted to make sure this was brought about so everybody can see and hear what's going on, what can be done to reduce their liability to flood insurance. And that's one of the reasons why we have FEMA and everybody here tonight, because it's going to affect us all. When I bought my first home in 1977 in Pennsville, the Flood Insurance Act had come into effect several years before that. My flood insurance for that house for the first year was $50 a year. Now we're talking $200 to $300 a month. So the cost of flood insurance has continued to rise. And now the proposed changes with the flood insurance seeking out to a bunch more people and a lot more houses, it's going to continue to erode the value of homes in the area. And that's my concern. It's, we've had enough problems in the last 5-7 years with home prices continue to drop. Salem County has seen a total drop of about 34% in values from the peak in 2007 to now. And in Pennsville, especially where we do most of our business, we haven't seen those prices start to drop yet, or stop dropping yet. They have still continued to come down. And that concerns me, as a homeowner, as a business owner, and with lots of people over the years I've sold houses to, they're all concerned about where is their equity at, where is their nest egg for the future. And my concern is Washington, D.C. has enacted these programs with very little regard to what it's doing to the average Joe, everybody here in this community, with the cost of it. The cost continues to go up, and the values of homes continue to drop. Teresa brought up a very good point about with the cost, what's happened. The very first question out of anybody's house, any buyer that comes along, is they want to know about flood insurance. And she's absolutely right. The first idea that they want put out there is they do not want to be in a flood insurance zone. And that is just continue to erode those prices even more. And if we look at the flood maps, if anybody's seen the new flood maps yet, it's taken a large portion of Pennsville is going to be in a flood insurance program, a large portion of Salem City, and Kearney Point, Pennsboro also. And my concern is just, what's that going to do to these communities? We've struggled the last few years with businesses in town, and now we have house prices have been dropping. Supposedly that makes it more affordable, but the flood insurance, nobody wants it. And I'm concerned exactly what that's going to do to our communities. So my concern is, we need to make our politicians in Washington, D.C. accountable and let them see just what this is doing to our livelihoods, our homes, and our equity in our properties. So that's it. Thank you.
Our next realtor to speak will be Sue Ann Lady from American Dream in Kearney's Point.
Hello, everybody. I am going to say not the same things that everybody else said because they're all true. I mean, I have a niece that I sold a house to that has now, has a bill for $2,400, double of what it was when I sold it to her a year ago. A $47,000 a year, $47,000 house. Very affordable. She fixed it up with her dad. It's cute, it's affordable. But now my mom walked in the other day, heard her on the phone and said, how am I going to pay this? It's $2,400. I didn't get that kind of a percentage increase in my salary. So again, we're all struggling with that. But today I'm speaking as the director from Habitat for Humanity in Salem County. We are in the United States the 4th largest builder of affordable homes. Here in Salem County, we have built 37 homes. We're building 2 in Carney's Point right now. One of them is not in, none of them are in flood zones originally. But one, from what I understand, we just purchased the lot a few months ago, and I'm hearing now that it may be in a flood zone. So it's going to be more cost to elevate the site, to make sure, like Teresa was saying, that things are properly elevated so that these people aren't paying flood insurance. So over the years, the 37 houses we built, I received a notice from Fulton Bank, who does all the processing for us. And they do this free of charge. They're wonderful to us at Habitat. But I found out that I'm going to be fined $1,000 a property, and that I'm going to have to pay a $2,400 minimum policy for each of these houses if I don't go to these homeowners who are maybe 20 years into the home. They're in fixed incomes. These are people that we've built houses for. We've encouraged them to become homeowners. They pay taxes just like everybody else in this county. And now I'm going to them and say, well, if you don't pay $2,400 a year for extra on top of what you're paying for your mortgage, we're going to have to impose that. I'll be fined if I don't pay it. That's $84,800, $84,800 a year. That Habitat only brings in $50,000 a year on their mortgages. We don't charge interest. So, here we are providing a wonderful service to people in our community, and, we're being, I feel, penalized now. And we're actually, it just seems to me that, how can you come back in and backdoor somebody like this? It's deceitful to me that someone has a home, they, have a contract with us, they're going to pay this payment for 20 years, and they own their home. And now all of a sudden either pay it, or I have to put a policy on the house, or pay it ourselves. So again, it's going to impact one of us. Either a nonprofit that's not going to be able to perform services in the county, or these people are going to have to dig into their pockets deeper. The average person in this county that's on a fixed income brings home about $740 a month. Almost half of that is taxes on the property. So I applaud anyone that can live on that. I just think and I visit these people, I sit at their tables, I try to help them figure out how to work around these things. The county no longer provides ramps for them. Habitat has now built 23 ramps in this community because the government stopped doing that. They stopped helping, our neighbors. So as a good neighbor, I'm here in support of the people that are in the affordable homes, not just Habitat, but the young professionals. My niece, who's a teacher, who's in a $47,000 a year home, who now is looking at, wow, where am I going to get this extra money? So anyway, I appreciate that everybody turned out. I'm actually overwhelmed how many people are here. So thank you very much for being here.
And our last realtor to speak will be Bill Nelson. He's a realtor broker associate with Berkshire Hathaway in Mulligan Hill.
I'm here crowd than I expected, but we do appreciate everybody coming out over this issue. My personal experience with flood insurance happened to be not from a owner-occupant standpoint, from a landlord standpoint. I purchased a property in Carney's Point. We were not aware that it was actually in a flood zone when we purchased it. We found out a couple months later when we went to refinance it. But as a result, my flood insurance at that time, back in 2004, was around $900 a year. It has since then grown to about $1,950 this past year that I'm paying on this 874 square foot home. Trying to figure out if I do the breakdown on it, my first 6 months of rent collected basically goes to pay the principal and interest on the loan. If I go, the next 3 months I'm going to pay my taxes, which have actually gone up about $1,000 since I took ownership of the property. The next 2 months goes to pay the flood insurance premium. And then the month number 12, the last month I have, goes to pay basically the sewer bill and a couple other miscellaneous expenses I have on the property, including my homeowner's policy. So from that standpoint, when this insurance goes up next year, where am I going to get that money from? I'm assuming that most people in this room are homeowners, but we have tenants that also pay these expenses that are on limited incomes or fixed incomes or many situations just like you. So my question is, where's that money going to come from? I can't go back to my tenant and say, your rent's going to go up because flood insurance has increased. A lot of times, as a landlord, you can't do that. HUD and a couple other agencies will not permit that. Which brings me to the next thing. I've tried to sell this property now a couple times. Even in peak in the market, I priced this property about 30% below what it should have been in comparison to other properties, and it still didn't sell. Number one reason was flood. Nobody wanted to put an offer in it, and there's nothing I can do about it. And to add more to that, I could share a fence line with a person who is out of the flood zone. I'm in. The difference is he could sell his, people wouldn't want to look at it, I'm stuck with mine. So if you take that into consideration, how many other people are in that same situation where they want to sell, they want to move, they can't absorb the additional costs? And my question is to FEMA and everybody else here is, at what point do people start to walk away? At what point do we just throw in the towel and say, I can't afford this, I'm moving elsewhere, I'm going to move to a more affordable location? And the problem with that is who's going to come in to fill that void? Who's going to come in and occupy these homes that are now empty? At what point, at what number is going to be acceptable in the vacant homes in the towns and to the banks and everybody else? So that's my one question, and I hope it gets answered tonight. And again, thank you for coming out. Appreciate it.
Thank you, Bill. Our next speaker is Mr. Al Allman. He is a loan officer with Oak Mortgage. Thank you.
Okay, thank you. I'm just going to address a few items as they relate to the mortgage that you may have on your house. There has been a lot of confusion about how much coverage you have to have on a house as far as if you're in a flood zone and for flood insurance. There is a difference sometimes between a local bank that holds your mortgage, which has some more flexibility, although that's changing. Or if you have a mortgage through a conforming source such as a Fannie Mae type mortgage, which is people are familiar with. And if it is a Fannie Mae conforming type mortgage, or which also includes FHA, VA, you have to maintain a minimum of the 100% of the replacement cost of the value of the improvements, not of the land. The maximum insurance available from the National Flood Insurance Program, which is $250,000 as far as I know, unless it's changed. Is it still okay? And or the unpaid principal balance of the mortgage loan. So if you're below the $250,000 loan amount, I would say that normally your unpaid principal balance of the mortgage loan is probably going to be the lowest as the replacement cost of property continues to rise. So you may want to, if you're in a situation where you have flood insurance currently, look into that issue with your loan servicer, wherever you mail your payments, and find out if the unpaid principal balance is less than the replacement cost, and therefore you could lower your premium that way. I'm gonna have to put my, sorry.
Big print, now it's small print.
Sorry. Now, one of the things that the flood law of the revision in 2014 did is to change the minimum requirement for, or actually the maximum permitted deductible. Under most situations, the maximum permitted deductible has been $5,000. I found out today by reading this information that that is now $10,000. Is that within your purview? Okay. So I personally have a house with the flood insurance, and I'm going to make a call tomorrow to my insurance company to find out what difference that's going to make in my premium if I take the $10,000 deductible instead of $5,000. So again, any of you who are out there with this same situation should be looking into that. It is possible. It is possible to roll over a flood insurance premium on a house that's being sold, which in the past was a good idea. Today, it's not necessarily as attractive because things are, because of the increase in policies in general. And there has been a change to the subsidy under the new policy, which allows a minimum increase capped at 18% of premiums until they reach their full risk rates using data from the FEMA elevation certificate. So this is something that if you're at a certain level now, and again, my particular scenario, I've gone from over the past 4 years from about 700 to 1100 to 1500 to 2200 this year myself in flood insurance. So it's I'm feeling that pinch too. If you are an owner holding a new policy, you may be entitled to refund because the change in the 2014 law actually has reduced refund or has reduced premiums and for those existing policies, and therefore you may have been paying, and it's kind of retroactive, so you may have been paying too much for the past couple of years. So that's another thing you might want to look into with your mortgage lender. The other issue I wanted to bring up was the deductibles. As I mentioned, the deductibles have gone from $5,000 to $10,000. However, that doesn't include loans which are guaranteed by the United States Department of Agriculture, what they call the USDA rural housing loans, or if it happens to be a USDA direct loan, their minimum permitted deductible is $1,000 for newer homes and $1,500 for homes which were pre-firm, which I believe in this area is 1987. So those are just a few things that, again, hopefully that if you are involved in a situation where you currently have the insurance, please get in touch with your lender or your insurance agent to find out what the difference will be of changing your deductible from $5,000 to $10,000. Okay? Thank you.
Our next speaker will be April Durham from Allstate Insurance. Ryan Zimmerman, the owner of Allstate, is ill tonight, and April is taking his place.
My name's April, and I know this is a serious issue for everybody in Pennsville. I'm a resident of Pennsville myself, see a lot of my neighbors and clients in here tonight, and I'm really just here kind of, Al actually touched on a lot of situations going on with flood, and I'm really just here to help afterwards with actually answering any questions anybody might have, and there's a lot of misconceptions and kind of hysteria right now going on because there are certain things that you can do, like Al touched on some of them, to actually get your rate lower, or depending on who you're taking your loan through. There's all different kind of things. Elevation certs sometimes help. There's just a lot of factors that go into it. I have a lot of people call me up and say, well, my neighbor's paying this much, but I live here and I'm paying this much, and why is that? There's all kinds of things that go into that. And just, I'm right here at the office in Pennsville. I'm gonna have my cards tonight. If anybody wants to call the office, you know, I can run a elevation to find out where, what flood zone you're actually in, if that's a concern for you. Right now, I mean, there's gonna be some changes. We can't tell you, I don't know what those changes are, but you know, I could run you a quote, let you know how much it would be. If you're thinking about selling your house, at least maybe you could go to the prospective buyer and maybe give them an idea of what they might be looking at. Just all kinds of information that I could help you with. Maybe take, you know, like Diane came into my office the other day and she had a prospective buyer that said, hey, I got a quote somewhere and it was $3,000 for the year. And I said, well, really, technically, if you're quoting it with FEMA, it should be pretty much the same wherever you go. And she gave me the information on the house, and I ran the quote, and I gave her 2 different quotes. One was for $800 and one was for $1,100. So it just really depends if the information is getting put across correctly or when they're actually doing a quote. So that's where a lot of the confusion comes in, and it just could be, you know, who's giving you the actual quote. I know I have a lot of customers in here tonight that I see that come in all the time because every year their flood insurance is going up because it changes with their mortgage. And it's frustrating. I know I'm the last person that people want to talk to because I'm the one that's going to end up telling you how much you're going to be paying. And nobody wants to hear that. So I am available. Like I said, we're here locally, right here in Pennsville. So anytime anybody wants to come into the office or give me a call, right here on Carroll Avenue. All right, thank you.
Our next guest speaker is Mr.
Excuse me, I missed one key point. Could I just real quickly say that?
No.
Okay. Thank you.
Hurry
I
up.
just wanted to say that the lenders do not require contents coverage on flood, so that, you know, you might look at your policy also and see if you're paying $1,500 for the insurance policy, maybe $200 or $300 for contents coverage, which means, you know, if you have a flood, then it covers your personal property. So that's something that is optional. Lenders don't require that.
Thank you, Mr. Allman. Our next speaker is Craig Wender. Craig is from the New Jersey Association for Floodplain Management.
Thanks, Dan. Tonight I'm just going to tell you a little bit about what the New Jersey Association for Floodplain Management is. It's NJAFM. We're 100% volunteers. I'm a volunteer. My day job is an engineer, but I've met Diane a couple months ago back at the Salem Open House, and I've been talking to her since to help her set this night up. The organization has 400 plus members of engineers, planners, local officials, state officials, county officials. We have representatives in every county. The main goal of the group is to provide education and to lower the loss of life and property from flood throughout the state. So with that being said, we are a member of a larger group called the ASFPM National Chapter. They have a program called the CFM, which is a title that someone, after they've taken a test, has passed the equivalence that they deem to say that they understand the flood maps, they understand the building codes that go along with the flood maps, and they lead throughout the state when, you know, the permitting and the different processes that happen when someone builds something or when you upgrade your home or anything like that. Within the group, we are partners with FEMA throughout all of the new mapping updates in the state. We have a legislative committee that's met with every state senator and congressman down in DC. We also currently work with the senators as they're going through the legislative actions that are happening. We have a CRS committee. CRS is the community rating system, which is a way for communities as a whole to take some steps to lower everyone's flood insurance. Currently, I think we're working with Pennsville to try and get Pennsville into the program. There's a training committee, like I said, doing outreach and things like that for CFM training, plus how to flood-proof your home to get lowered rates. And then lastly, the CFM program that we've got currently in the state. There's over 200 CFMs, I believe. So that's what the organization does. For homeowners, we're a resource. If you have a question, you can go to the site, you can email me. We'll get you in touch with all the fine people up here to answer your questions and hopefully get you on the right track fast. So thanks. Thanks, Dan.
I'd just like to say that Craig has been a great help in putting this meeting together. Without him, I don't know what I would have done. So thank you, Craig. Our next speaker is Rob Lynch of Western Technologies Group.
My name is Rob Lynch, and our company is Western Technologies Group. We are a New Jersey-based company that does flood determinations, and our client base is usually mortgage companies, surveyors, engineers, insurance companies, realtors, basically professionals that service the industry. But we also sell products and reports directly to the public, and what I want to kind of get across today is this. Based on the size of this room, without a doubt, there are people here who were told they're in a high-risk flood zone, and they're not. And there are definitely people in this room who are paying high rates for flood insurance that are probably more than they need to be. What we do for our clients, whether it's an attorney, or whether it's a mortgage company, or whether it's an insurance company, is to help them find those individuals that have fell through the cracks and help them basically be properly identified. So, as most of you probably know, your property under the NFIP is in a high-risk zone. If the high-risk zone touches the structure, it's not whether or not it's simply on your property, and that's a distinction sometimes some mortgage lenders don't make. So there are just a lot of ways possibly for some of you to either have that requirement removed or lower rates, and that's what we do. We have a website, njflood.com, and if you want to go there, we can get reports. We have a New Jersey-based flood resource center, and most of our staff are certified floodplain managers, so we understand New Jersey, and that's what we do. So thank you very much.
Thank you, Rob. Our next speaker is Tyler Ardron from SmartVent. You want me? No. Oh.
Thank you, Diane. So a little bit about me. My name is Tyler Ardron. Like Craig was saying, I'm a certified floodplain manager, so I'm up to date with all the codes, the new regulations regarding the floodplains in New Jersey. And I want to start out by saying I'm not the bad guy, and neither are we here. So we're here to help answer questions. Any questions that you guys have, just feel free to come over. I work for SmartVent. We're a foundation flood vent company. But the main thing here that we're offering is our flood risk evaluator service. What that is we review elevation certificates for you guys that are in the flood zone. What elevation certificate is you're required to get that if you're in a floodplain to get your actuarial rates. To get that, you're going to contact the surveyor. They're going to fill that out, and that's just going to pretty much lay out the home for me so that we can see it. What I do is we review that, me and the rest of my office, which are certified floodplain managers. We review it, and we tell you what exactly needs to be done mitigation-wise to lower your flood insurance premium. We also have an insurance agency that we can give a quote on what your premium will be after you do these mitigation options. So after this meeting, feel free to come over to my table. We can do this right on the spot and see if we can get your flood insurance premium lower for you, or lower in the future when you go to sell your home in this case. So if you have any questions, like I said, please stop by. We'd be happy to help you out. And we're not the bad guy, like I said. We're here to help you. So thank you.
That's true, he's really not a bad guy. He's a really nice guy. Our next speaker is Tony Dariano. Tony is the floodplain manager for Pennsville Township. Thank you, Tony.
Wow. I'm one of those certified people he was talking about. Some people say I'm certifiable, but that's questionable. My name is Tony Dariano. I am the construction official, building and fire subcode, and building and fire inspector in town, as well as being the floodplain manager. I hope that I have some good news for you, because we as a community are trying to get back into the community rating system. The community rating system is one thing that can lower your premiums, and it's because of things that we do. There's a lot of things that can be done to go up the ladder for reduction. You can get as much as 45% reduction in your insurance premiums if the town works toward that and moving up the rung from 10, 9, 8, 7, all the way up to number 1. Each time you move up that rung, it's a 5% decrease in your premium, which to me I think is good news. Something I've been working on for quite a while. I have had my community activity visit, which was one of the most important steps in moving in that direction. And once that letter comes back to me, a couple of things I have to do. It moves on to FEMA. and then it comes back to us getting into the program. There's a lot of things that can be done that help us in that. Some of them are increasing the regulatory standards in the community to go above and beyond what our ordinance states now, which may affect some people that want to do additions, or it may affect some people that don't like an addition that has to be elevated. But by and large, it benefits the entire community because the entire community benefits from the rate decreases. We've been looking into doing a lot of things. A lot of things have been going on in town. Rob McDade was supposed to come up after me, but he can't make it tonight because he's in a township meeting, and he was going to tell you a little bit about some of the things that the township is doing as far as relieving flood areas where water builds up in areas, new drainage systems, stuff like that, dam control. But as far as the other thing on the community rating system, that's a program that's really going to benefit this town, and it's a program that I am really working hard on to try and get into play. Those of you that aren't building, that have houses now that may have issues with their house, there are things that you can do to your house that may not cost a lot of money, but can help you as far as reducing your rates, putting flood vents in and things of that nature. So that's basically it. I'll be here at the end of the meeting. If anybody has any questions on the community rating system, I'll be happy to help you out with that. Thank you.
Thank you, Mr. Mariano. Our next speaker will be Wayne Bergman. Wayne is from FEMA. And I just wanted to say this before Wayne came to speak. The people that are here from FEMA tonight are not responsible for the Biggers Waters Act. The people responsible are your congressmen and your senators. So I wanted to make that clear that they are just doing their job. They're the messenger from the government. So Wayne, please.
I've been working across here for a while, but thank you. My name is Wayne Bergman. I work for FEMA, but before I worked for FEMA, I sat in Tony's desk. I was a permit official, floodplain manager for a small community like this, 10,000 residents. We had about 850 policies. And just like Tony, we got the CRS program, and we are now at 6, which means 20% savings. Takes a lot of work, takes a lot of support, but it's definitely beneficial to every policy here. My first question I want to ask is, how many people have a policy, flood policy here? Great. Okay, and you know about what you pay a year. Probably, your average should be about $1,300 to $1,400. Is that correct? Higher. Some pay lower. Anybody lower than $1,400 a year? Okay, should be. I mean, I'm looking at it. But there's some savings like these people have said. There are some ways that you can look at. Tony can help look at your policy. You have an elevation certificate of your pre-firm, which is built before 1982, I think, huh, Tony? That's when they came into the program. Or post-firm, which is, if your house was built after 82, it should have been built in compliance. With that said, the rate should be about $1,300 to $1,700 a year in that 80 flood zone. I'll just tell you that right now. It's not, Tony can look at the house, well, I don't know, I'm putting Tony on the limb, something he can do to look. I did that in my community, and sometimes just looking at flood vents that might be needed, or maybe a mechanical equipment that was below the BFE. Who was I was speaking? Yes. Sorry, I turned my head back. I was speaking to this realtor here, and she said it was a parent's house, and that could help. That could help an awful lot by just mitigating or raising mechanical equipment. And there is a cost involved. We understand that, so you have to balance that. But in the long run, and it should be savings. So let me tell you what the long run is. Now the bad news. Okay, I'm here to tell you the bad news. I didn't write the program, the National Flood Insurance Program. This wasn't their act. This is the Homeowners Flood Insurance Affordability Act of 2014. Didn't write it, but they did make some modifications to the Bigger Waters Act. Thank goodness for that, because now we have some grandfathering in that really is going to save you, could save you, will save you money. But things that will happen. Your flood policy, if you're paying $1,700 a year for your flood policy, you're going to look at about a 15 to 18% increase a year on that policy. I'm going to tell you the news, that's what it is. It's either going to come in the form of a rate increase, or possibly a reserve fund fee. Plus, you're going to have, if you're a single-family residential home, and it's your primary house, it's going to be a $25 a year surcharge. If you have a second home that you rent, it's going to be a $250 surcharge. If you have an insurance, and I'm just giving you what it is because I need y'all to know, but there's some things that these other people have said that can maybe help you with some mitigation to reduce the rate, the cost. The other thing, if it's a commercial, $250 a year surcharge. And again, all these policies are going to have that 15% rate increase a year because of the Homeowners Flood Insurance Affordability Act of 2014. Congress passed, and of course the President signed in March of last year. I'll answer. I mean, I didn't hear that question. What is it?
Does it increase at 15% forever?
At this time, there's no limit where it's going to stop. However, but the good news is this: Congress will look at this every year, and there are going to be some changes, I think. But that's good.
I just wanted to say, please, as soon as we finish here in a few minutes, you can ask all the questions you want. Okay? Thank you.
Thank you, Doc. Thank you, Doc. But that was a good question. But at this time, yes. But again, I was talking to one of the congressman's assistants over there, and he's got my card, I got his, and certainly very supportive congressman to help with these reductions. But the long run is, you need flood insurance. It's something was affordable. I still think it can be affordable. Houses that were built after 1982, look at your rate. Your rate shouldn't be over $1,700 or $1,800 a year. If you're in an A flood zone, certainly if you're in a C flood zone, it should be about $400 a year, $450 a year. Anybody in a C flood zone? No. Do you have a flood policy? You do?
No, I don't have a flood.
Oh, okay, it's around $450, $460 a year on the C zone, so that's what you're looking at. And that's where I am. That's all I have for now, and certainly I'll be here. Thomas Mendez is our mapping floodplain specialist here with FEMA. He's a local guy from New Jersey. By the way, if you got my accent, I'm not from New Jersey, I'm from New Orleans, okay? So, but, we will hit losing teams this year, right? But anyway, bottom line is, I know exactly where you are because I'm a homeowner as well. So thank you, Diane.
Thank you. We have one last speaker, and I know there's going to be a lot of questions, so to make this more orderly, if you have a question, come up this aisle, no more than 4 people at a time standing in the aisle behind each other, and then as soon as one person asks a question, someone else can come up. But just to keep it orderly, and please limit your questions to like 30 seconds or so. So George Casimas is our last speaker. George is a real estate broker from Toms River. And after Superstorm Sandy, George started a group called Stop FEMA Now. And George and I have been communicating for about 4 or 5 weeks now. And tonight is the first time I've met him, and I can tell you he's a wealth of information. And we're going to let him speak, and then after George speaks, start lining up in this aisle, please, if you would like to speak. Okay? Thank you. George, please.
How you doing? My home got damaged after Superstorm Sandy. About 3 months after Sandy, my neighbor comes, senior citizen, he comes next to me, he says, George, we gotta raise our home or our flood insurance is going to $30,000 a year. This is no joke, folks. This is no joke. I was like you, I started asking questions. This can't be real. It is real. Like the gentleman from FEMA said, there was a bill that got passed in Congress, and I believe somebody from Senator Menendez's office is here today. Senator Menendez actually sponsored a bill. It's called the Homeowners Flood Insurance Affordability Act. If you didn't hear about it, you should actually read it. And if you didn't thank him, you should thank him. He stopped our rates from going to the actuary rate. Your question in this room is, and I think that one gentleman here hit on it, will it go up 15% a year annually? Your rates are going to increase until you reach the actuary rates. You need to find out what your actuary rate is. For example, FEMA requires you to be at this rate. If your home is up here, you're okay. If it's above the BFE. If it is at or below the BFE, and the more below the BFE you're going to be, you can get up to $64,000 a year. We have one of our members, we have members across the country. One of our members has a $64,000 a year flood insurance policy. This is not a joke. Your first question when you wake up tomorrow at 9 a.m., call your flood insurance agent. Don't say what my flood insurance bill is going to be next year. What is my actuary rate going to be? If you're a primary homeowner, the way the Home Flood Insurance Affordability Act is written, your premiums will rise up to 18%, 15% average in a community. If you're a commercial property owner, a second homeowner, a repetitive loss property, or like me, a substantially damaged homeowner, you will receive a max 25% increase compounded annually with a $250 surcharge. I started this group because 10,000 homes in my community were put in a velocity zone. And as I started researching this, and you guys are in level 1 of grieving, this is a national issue. And as I opened up a Facebook page and a little website to gain some information, folks were coming not only from New Jersey and New York, from across the country, and saying, we're having the same problem. You're not alone. There's 22,000 communities, 5.5 million people who have a very good chance of losing their homes.
I'm one of them.
I've spoken to groups from Atlantic City to Massapequa, New York, and as far west as Lycoming County. We're going to hit the rest of the country. And collectively, on the back of the sheet that Diane gave you, it is very, very important not only to send that to Senator Menendez, to send it to every senator and congressman, not only in New Jersey, but across the country. I'm telling you, this is going to take work. It is a lot of work. There's folks in Congress that are saying, we are welfare recipients, we are subsidized. I'm here to tell you that is incorrect. FEMA is $24 billion in the hole. That's why we're going to start seeing these exorbitant rise in flood insurance premiums. $24 billion. Do you know why they're $24 billion in the hole? Only 44% of our premiums actually goes to paying our claims. 56% goes to administer our flood insurance program. We are subsidizing FEMA. Okay? The more you give the FEMA monster, the more they're going to want. This is not going to end. Here's what's just happened recently. Let me take a step back. In 2017, the National Flood Insurance Program needs to get reauthorized every 5 years. 2017 will be when it needs to get reauthorized. That is the next big fight. Please remember these 3 words. Stop FEMA now. If you want information, if you want to discuss things, we have a New Jersey group and a national page. Feel free to come on. Diane, a bunch of folks from Pennsville are on. You have questions? Ask those questions there. We'll answer them for you. We have a bunch of folks. But I do strongly suggest talking to the gentleman from SmartVent and your floodplain manager, okay, and your insurance agent. There are a lot of mistakes, okay? And if there's a mistake, it'll be a $3,000 to $1,100 difference. That is a big difference. But what you need to understand, your biggest question is, What is my actuary rate? What is my flood insurance going to end up eventually? Got to know that number, okay? Here's the two things that you need to understand that are recent. In the Bigger Waters Act, which got passed in 2012, this is what's giving us the headaches. It's called the Bigger Waters Act of 2012. There is a mandate in the Bigger Waters Act called the TMAC, Technical Mapping Advisory Council. And basically their mandate is to take into consideration sea level rise. Our current maps do not take into consideration a 2, 3, 4, or 6 foot additional elevation that you're required on our flood maps. If that happens, and you're currently at the elevation, and they add 2, 3, or 6 feet on the maps, you're going to be significantly less on the maps. And lastly, on January 30th, President Obama issued an executive order basically to take sea level rise into account with all federal agencies, including FEMA. It's not, this isn't, I apologize, I don't have good news, I can't give you the bomb, but I'm here to tell you that this is real. We've been in Congress. We helped push the Homeowners Flood Insurance Affordability Act. Senator Menendez is key in this. He is one of the senior members in Congress, and he understands the issues, okay? The more we support him, the more he will support us, okay? And we need to make some phone calls. Please join us at StopFEMANow.com, on Facebook Stop FEMA Now, on Twitter Stop FEMA Now, and thank you again, folks. I love seeing people come out. This is great, and do me a favor, call your friends. You see something, forward them the email, forward them a link on something. This is important. We need to get people out there. We need to reach 5.5 million people. Together we can make a change. Thank you, guys.
Well, I don't see anybody in this aisle, so I guess there's no questions. Please, before your question, just give your name and where you live, okay? And who you want to direct the question to.
Okay, my name is Mike Lynn. I live here in Pennsville, sorry. Mine is directed towards Mortoni, I guess, because what we don't have at this point is a copy of the map, the proposed map, and the adoption date. So that would be of a primary interest, I think, to a lot of people here, what that's going to look like, and how can we get a copy of that, whether we go on a web page or whatever that may be to make that happen.
Did everyone hear the question? No?
I'm asking for, how can the general public get a copy of the proposed floodplain map? Okay, and when will it be adopted?
I don't know if you can get it on disc. You'd have to ask the FEMA guy if that's available just for the public. I only have one set of maps, which are the preliminary maps. As to when it will be adopted, I have no idea. They're talking about starting the adopting process sometime in March, but they're also projecting like a year before it gets adopted. I didn't bring the maps that I have tonight because they're, to be perfectly frank with you, they're very hard to read. For me, it's easier to go on the disc on the computer where I can blow that area up really big and then see the streets and the names and then pick out properties from our tax maps. But I mean, anybody else trying to look at that map tonight, you might as well try and learn Greek or something, because you'll never understand it.
A quick point, our flood determination includes the preliminary map, so this is available if you want in a report for your property.
Okay. If you go to region, the number 2, coastal.com, you can see the preliminary maps in New Jersey.
And you can also download them for yourself.
Thomas, go speak.
Wait, come on.
Yeah, I got you.
Just 1 second, please. This is important that you know where to go.
How you doing? Tom Mendez, CFM over at FEMA. You can also download the maps itself at msc.fema.gov. You can download not only the current effective map, but also look for the preliminary map so you can compare the two to see exactly where you are and where you're going.
Can you repeat that? What was the website again?
The website is msc.fema.com. .gov, sorry. And also at region2coastal.com.
All right, we're going to put this information out on our Facebook page. So if you didn't get it, it'll be out on the Facebook page. Next.
Well, I have a general comment for everybody here. I work with a company that just recently raised some properties in Pennsville, subject to the new FEMA elevation, and found that between $30,000 and $31,000 in grant money is available for anybody that's been subject to Sandy, okay, through your insurance company backed by FEMA. So if you need to raise your house, okay, there's a $31,000 grant out there that most people are not aware of to assist you in that effort.
Okay, thank you. Next question.
Hi, my name is Maureen, and I live on K Drive in Pennsville. And I have a question I keep hearing about, and I'm sorry I don't remember the date, things prior to 1980, whatever, being grandfathered. What exactly is going to be grandfathered?
You could answer this question.
I think Lynn could probably know that.
Yes, I'm sorry. What did I think
Y'all came into the program in 1982, correct, Lynn?
Correct.
So anything built before 1982 is pre-firm. Pre means pre the community coming into the program and flood insurance rate map. So that's a different policy where you don't have to have an elevation certificate to get a rate. Now where it could help you is if you're close to a border, the elevation certificate puts you at or above the base flood elevation, then that rate could certainly decrease. Does that help you? That's the difference.
So we wouldn't have to put in flood vents and all that as well?
You want to get an insurance quote, first of all, to see what, see what the quote will be for flood insurance. And that would be, it would be a pre-firm rate, which is going to be higher than if your house was built in conformance. So you have to, it'll be higher. If your house is higher than you think what the minimum is, and you can talk to Lynn maybe about that, he might have a good handle in certain areas. I'm sorry, what?
I'm Tony.
Tony, excuse me, I'm sorry. Tony, no wonder he wasn't answering.
But you're saying the rates will be higher?
Yes, it's a pre-firm structure. Yes, the rate will be higher unless you're built in conformance. And then,
Who would build into performance if you weren't in the flood insurance?
well, you could be. In other words, you might have elevation. You might need to do some modern modifications like flood vents or something of that nature.
Okay, next question.
Wait, also grandfathering, what grandfathering does, what happened in the Homeowners Flood Insurance Affordability Act, grandfathering, when you sell your home, the other person can get your rate, okay? Make sure your rate is locked in. If you live in a flood zone, and I don't know what the cutoff date here is, maybe the FEMA gentleman can help you. If you buy flood insurance and lock it in, or currently have flood insurance, it is quote-unquote grandfathered. When you sell your home, the new home buyer will get the grandfathered rate. That was a very big change that was changed from the bigger waters. If you buy flood insurance after the cutoff date, and Mr. FEMA can hopefully confirm this, you will not be able to get the grandfathered rate. You're gonna have to pay the actuary rate. Actuary rate is a key word.
Next question.
All right, my name's Scott Hudson. I'm with Pennsville. I kind of have a two-part question here. First for FEMA. What's been the delay in enacting the preliminary maps to become permanent, or at least to start the process of review? Because we're almost a year out now.
Thomas, do you want? The one I'll take it.
Really, the delay is just getting all the information together. Congress has put some new standards on us through HFIA, Homeowners Flood Insurance Affordability Act. We're trying to get the maps as right as we can before we put them out. And that's what's happening with our engineers. So we're just trying to get as much data as we can before we go forward, because the new maps, we haven't had one since '82. New maps we hope are going to be better for you, more accurate maps with better studies. And that's what's taking the time.
Okay. For the realtors here, with that being said, we've been a year out roughly for these maps. And you're talking about the rates going, our values of our homes going down. We're looking at, when I just checked the FEMA site the other day, it's giving out May of 2016 as the most current date for this to be completed. What's that going to do to anybody being able to sell a home if we're at least another year and a half out?
Well, disclosure. If you are aware of it, you have. A lot of this business comes down to disclosure. If you're aware of a change happening on our position, we have to disclose that. So if we know that that particular house, when we take the listing, is going to come under that new flood zone, we have to disclose that to the buyer. You have, as a seller, should disclose that to the buyer too. Because the last thing you want to do is go have a contract, get the closing, and a week before closing it falls apart. And believe me, it does happen. So
this is going to affect both people in the floodplain and even those out,
Absolutely.
because nobody wants to look in this town if the maps aren't finalized, is what I'm getting at.
This is why this topic right now will affect not only homes that are in, but homes that are out.
Yeah, mine's out, and this
Because
is gonna kill me.
I'm not gonna look into town that I might have a possibility when they redo the maps of that property being in that zone.
Thanks, Bill.
Hi, I'm Susan. I live in Pennsville. I actually have two questions. The first one is, I like hearing that there might be hope with this community rating system that we could go through and get up the ladder and potentially get community discount. Sorry. So I like the idea of hearing that there's hope in this community rating system, and that we might move up the ladder with some, work and investment to get the community discounts as a whole. But when I think about, what it takes to get up the ladder, and I'm not an engineer or anything like that, but it seems like there would have to be some sort of investments made to the community to make sure that we get up the ladder. And are we just replacing, a reduction in flood insurance premiums by getting up the ladder with higher taxes to cover those investments?
That's a very good point, Susan. That's a very good point.
I know some of the first couple steps are real easy, like your township will comply you to raise your home, any new construction or anything substantially damaged, you have to go +1. So that's an easy compliance, but some of the other things might be levee systems or dunes or something like that, or pumping stations or something like that. That's going to cost you money. That's, our community has done a couple levels also, and I know several communities in that CRS program.
Yeah, but Susan, I think you're correct, because I have heard that to meet that means test is quite expensive, and are the taxpayers going to pay for that? That's a very good question.
My second question is, I have heard rumors, and I'd like for maybe some of the realtors or the insurance folks to shed some light on whether it's true or not. I've heard that if you don't have a mortgage, you can certainly drop your flood insurance, but I'm hearing that if you drop your flood insurance, your homeowner's insurance could elect to increase your homeowner's rates because you no longer carry flood. Is that true? Okay.
Two separate issues.
I don't believe that to be true because homeowners insurance technically will not even cover any type of damage due to a flood, so they're separate entities.
Okay. Thank you.
Okay, just 1 second.
Just say something about CRS. Yeah. Just one extra thing about the CRS program. So the state of New Jersey actually, the state laws have already set such a high standard that once a community gets into the program, they're automatically going to take advantage of things that you already do. So while there is extra work for Tony for sure, so good luck, but a lot of it, at the start at least, is administrative, and I'm sure you're already going through the paperwork and getting the state on board and getting FEMA on board. So, as far as additional costs, I'm not sure, but there are things that the state has already put in place to lower, or to make it easier for a community to lower their insurance.
Thank you, Craig. Next question.
Hi, my name is Jared Camp, and I live in Pennsville. During Hurricane Floyd, we were actually flooded. We had quite a bit of water in our house and our car and stuff like that. So my question is during Hurricane Floyd, we lost our power, so we lost our pumping stations, and we had torrential rain. We've had similar storms since then, but the township thankfully has done some changes. So my question is does that matter that we've been flooded before, but there's been changes made that has since prevented us from flooding? Like our pumping station now has an emergency backup generator, which we didn't have during Floyd. The bulkhead's been replaced, which, you know, before the bulkhead was replaced, I could stick my head through the bulkhead. So, you know, my question is do they take that into consideration, that there's been changes, even though we flooded before, there's been changes made so that the same situation wouldn't occur?
Okay, I'm not sure who, Tony?
Yeah, all these things that the township's doing now is going to go a long way in the community rating system. Having the backup generators on the pumping station, we're talking about making deeper wells in the areas where the pumps are. There's still some major things that have to be done, and no one has any money. Federal government don't have money, state don't have money, township don't have money. But things like raising the bulkhead all the way down to Salem Nuclear Plant, all those kinds of things help. But the township has been doing a lot, and those backup generators are one of the things that they're doing, and that certainly does help.
Yeah, I know it saved us a few times since, but, you know, I'm just concerned because we flooded in the past. So when they're considering the area, are they going to, like, say, hey, this area flooded once before, so let's raise the premiums?
I can answer some of those comments as well. So the map process, part of the reason why it takes so long is there's regulatory check marks that have to go along the way. So right now, the Salem County, you know, in the next month or so, will enter what's called the appeals period. And that's a period where any new information that the communities have, that'll get incorporated into the map. So for instance, if you know, some improvements have been made that aren't reflected in the maps, they can add that in at that time. Also, what's happening currently, Salem County is getting what's called a new hazard mitigation plan. I don't know if you've seen public meetings for those, for that update that's happening right now. So what happens with the hazard mitigation plan? It's a FEMA, you know, required document that the county must have. In the event of an emergency, that document, if they have that in place, they can start getting federal funding. Okay, so any mitigation project that's listed in that document can be used in order to get FEMA grant money to then pay for that. So for instance, there's communities throughout the state that have in their plan the need for a generator at such and such location. We want to do this here, we want to do this there. The disaster money becomes available, they can point to their plan, and FEMA can fund it, you know, through a few more steps, obviously, just to show that it makes sense, but once it has to be in that plan. So right now, Salem County, Camden County, Gloucester, they're all going through the same process, Cumberland, and they're going to look for input from the communities to figure out where, you know, mitigation should be happening. So that's something that you should also look for to participate in.
Okay, that's good to know. Thank you.
Next question, please.
My name is Doug Lifton. I live in Pennsville. I noticed the comment was made, there's, excuse me, 2,100 homes that have flood insurance right now. It's like 10% of the homes in Salem County. Within 1,000 feet of my house, I just watched, compared to the old 82 map and the new map, I looked out the end of my street, 3 or 4 houses, yeah, they were in the flood zone. Now I look down that street, they're all in the flood zone. The houses behind them, heading toward 49, are in the flood zone. Across the street from that's in the flood zone. They took another 50 houses and just threw them in the flood zone. They're right out to 49 now, it's crazy. And I'm thinking to myself, well, what are they doing? Did they raise it 18 to 24 inches based on, you know, forecast sea level rise? I don't know why it increased so much, and I'm thinking that 2,100 is going to go to 3,500, and then you're going to have what, 20% of the houses in the county in flood zones.
Right, 20% of Pennsville homes are currently paying flood insurance policies.
It'll go to 40 or 40%.
Yeah, even more easily.
Even more. In Salem County, 2,121 policies are being paid. That amount last year was almost $3 million.
So you're basically going to wipe the town off the map. Why come here? You can't have half the house covering the same property taxes. There's no way it's going to work. I'm concerned with source.
We are too.
Yeah.
We understand your frustration, and as realtors, we've been facing this for a while.
And the other thing is, I looked on the new map. It went from, it was over there, across the street down, the woods. It's not my front door. The question is, if it's at my front door but not at my house? I mean, where does it kick in? Is that the touch the structure?
Yes.
Has
to touch the structure. It has to touch the structure.
Well, it touches my front steps, which are 3 feet out from my structure, okay, if you want to say that. Then you step up 3 steps in.
I don't know where, I know.
I would just tell you that the base flood elevation used to be 9 feet above sea level in town, and it's now 10. And I can testify that the fact that the water is rising. I've seen houses that are down on Beaver and White and back in that area where people that lived there had a yard bigger than this in their backyard. It was all nice and clear and going into woods, and they can literally stand on their back porch and fish right now. And I've seen the fish jumping in their backyard. So the water is coming up. That's why more houses are being put in a special flood hazard area, because they're now at an elevation where they're below that level.
Thanks, Tony. Next question.
My name is Jack Cobb. I'm from Pennsville. My question is for the FEMA guys. It's more about the rates. Say my homeowner's insurance, I pay like $700 a year, which will cover the cost to rebuild my house. So I have to match that with flood insurance, which actually covers the same amount to rebuild my house. So why is it quadruple the price and the rate? I don't understand when you're providing the same service as my homeowners, but yet it's quadruple. I don't get that.
That's a good question. Anybody care to answer that?
Yeah, basically what FEMA's saying is, the more they raise the elevation and the lower you are as compared to the elevation, the higher your risk. And the higher your risk, the higher the elevation, the more money you're going to pay. I agree with you, sir. Has your home ever flooded?
No, not even a mud puddle with all the hurricanes I've been through.
Exactly. So in 30 years, you spent 90 grand. If you're self-insured, you'd be better off yourself if you're taking that 3 grand a year.
How can homeowners take that much and still pay that, to fix my house? But yet it costs them.
Yeah, you guys
all that to fix my house for the same amount of money.
And we'll be here after the meeting. I'd certainly like to talk to you personally to see where you are, how this rate is going up, and where you stand, and maybe talk to the floodplain manager, just to get some one-on-one rather than try to answer it over without knowing all the information.
Thank you.
Would love to talk to you.
Next question.
Hey guys, my name is Ralph Sharp. I have property in the area. Question, I just had a LOMA done on the property about a year ago. Now the new maps are going to come out. Is my current LOMA going to be no good?
Okay, who wants to take that one about
Just
the LOMA?
had that done.
The LOMA?
There's different types of LOMAs, and they're going to put a number by it, 1, 2, 3, or 4. And I don't know what your LOMA letter is. I'd certainly look at it to see. It's a possibility. I can get you in touch with our engineers. They can tell you for sure. And so if you want to come up after the meeting,
I sure would.
I'd love to talk to you. And that's a very good question.
Heard some rumors. I have property that are not in a flood now, but going to become in a flood. Should I put a flood policy on my policy now, on the home now, to be grandfathered in?
The answer is yes. Absolutely.
Sweet.
Oh, we agree to that? Yeah. I think everybody on this panel says yes.
Next question.
Hi, good evening. I guess now everybody's heads are spinning. Mine is, and I have multiple questions. The gentleman that addressed that you have a website that you can go on and you have services that help determine, I'm assuming that there's standard criteria that you use to make that determination. What is the range of the fees? Is it a set fee? Does it vary? What's involved with that?
Who was it? I thought that was.
this gentleman.
The flood determinations that we do are, the standard fee is $30 per report, and it's insured for $2 million also, the report itself.
All right, and I don't know who wants to answer this question, because I think we need some takeaways on exactly what we need to do. I don't pay flood insurance right now. I have a certificate on file with FEMA, but in order to sell my property, now you just said that I need to get a policy in order to grandfather that in so my potential buyer can get that rate? Okay, so for 15 years, I have not paid flood insurance. Now you're telling me, even though I have a certificate, I now need to get a policy.
It makes your home more marketable to us. I mean, I think it's a wise thing.
I have a question. What is an average mortgage payment here? What is an average mortgage payment here? Just mortgage? 700, say? Okay. If your actuary rate is $5,000 a year, is somebody going to buy your house for an additional $400 a month?
No.
So lock it in, okay? It's going to guarantee you. The other thing is, everybody's sitting here and talking about, how do I save? How do I fix this? There's a few ways. You're going to look at flood vents. You're going to talk to your floodplain manager. You're going to do certain things, the CRS community system. This is what we did in Toms River. They put 10,000 people in a velocity zone, okay? You're not talking about a couple $100 a month. You're talking about a couple $1,000s a month in flood insurance, okay? We fought the maps, not only as a community. We went like this, a group, to town hall and said, we're not paying $500 each for a flood elevation certificate. You hire an engineer, you hire a PhD, and you fix the maps. Not only did Toms River do that, and we got significant reductions, and I'll post a video on the Pennsville page, we got an 80% rollback in elevations and designations, not only in Toms River, from AC down to Massapequa. And FEMA, unfortunately, does not understand, does not take science or common sense into consideration with some of their maps. They do understand political pressure. That is why Senator Menendez's people are here. That's why a few other congressmen's people are here. They understand if you scream loud enough, if one person screams, nobody cares. When Big George and everybody else starts screaming, and Diane, by the way, everybody give Diane a friggin' hand, okay? Okay, there's hundreds of thousands of dollars in savings because of Diane here today, okay? And if she says something, do it. Please, okay? You gotta do it. I mean, obviously you guys love her and listen to her. I never met the woman. I drove 2 hours to be here on her faith, okay? I believe in her and I believe in you guys. Have your town appeal it. You can appeal it each individually. File a LOMA or pay the $30 and that's fine. $30 is a reasonable amount. It's not a big deal. But to file a LOMA, a letter of map amendment, think about $500 for every head in this room. And a high probability of them basically get ignored. Even if you have science that tells you that they ignore it, hire a PhD, they can help, okay? And have your town do it collectively.
I'm gonna cry.
I do have more questions, I'm sorry. My next question, maybe Al, you can answer this, is we ran into this when we built our house and we had the certificate and the lending institution we were going to would not accept it and would require flood insurance because they were going to sell our mortgage on the secondary market. We went to a local bank who said, you have a certificate, it's fine, we're not charging it. Do you think that will still be in effect or no?
Well, I think that's a situation that's kind of, I don't think what they told us is correct.
What do you mean?
Well, I'm saying that the lender, not the local bank, the lender should have been willing to accept a flood certification.
That was a local bank also.
But you said they were okay with it.
There were 2 local banks.
Okay.
One local bank said, no, we're going to sell your mortgage on the secondary market.
Right.
We're requiring it because it's documentation, everything's got to be in a row. The second bank kept the mortgage. They didn't sell it.
Okay.
They kept it in-house, and they said, no, we're not requiring it.
Okay, but what could happen to that second bank is that when they get audited, they may be in trouble too.
Audited what?
By,
now with the new laws in effect?
Well, yeah, by the federal auditors that come in and examine their mortgage portfolio.
Mm-hmm.
And they may say, you know what, bank, you need to have this.
Mm-hmm.
But again, it's if the lender, the local bank or mortgage company said that they weren't accepting your certification, your flood elevation cert, or your...
The first one that we walked away from, we went with the second one that didn't require it.
Okay, but I'm a little confused
Why
on
don't you
that.
speak after
Yeah, okay.
the meeting?
Okay.
We do that? Okay.
But I mean, I'm sure that that situation might apply to other people. My third question, or fourth question, whatever it is when you said that you're going to quote insurance, Ms. from, okay, what's the turnaround time for that? From the request to when you get the quote?
You call me up on the phone and it takes 5-10 minutes.
Okay. Because I called another insurance company, I've been waiting 2 months, they still haven't gotten back to me. Not your agency, but somebody else. So I guess maybe they were afraid to quote in the midst of everything going on. And the other thing is with what you were saying as far as the quote, to determination, excuse me. How long does that take to get?
About a couple hours.
Couple hours? All right.
But again, it's not an elevation certificate, it's the initial assessment as to whether you're in a low-risk zone or a high-risk special flood hazard. That's what we do. That's where there's a lot of errors out there where people think they're in and they're not.
Okay, what we're going to do now is change up a little bit because the specific questions that you have, as soon as we get done the meeting, which will be very shortly, you can go to these individual people and ask questions. I would like to bring something up. Attending here tonight, and we should be very grateful that they're here, is Ashley Harris. She's the Deputy Chief of Staff from the 3rd District. Robert Geis is the field rep for Frank Loviando. Julie Acton, our Salem County Freehold Director. And not Daniel, let me see, Rich Lombier is here from Senator Menendez's office, and who do I miss? Ben Lowry and Dale Cross.
And Rob McDade and Mark Chastain.
Well, they just came in. They missed the whole meeting.
We had a meeting.
Blame it on snow. Okay, what I'd like to do right now is conclude the formal part of the meeting. And I just want to say one closing remark, and then we can finish up. There are two kinds of people. Those who speak up for themselves and others, hopeful that they can affect change. And those who suffer in silence, hoping things will change. If you can't change what is happening to you, at least know that you tried the very best you could. Tomorrow morning, if everyone in this room would call Senator Menendez, Senator Booker, and Congressman Loviando's office, and read the back, what is on the agenda, or just say, you have to help us in Pennsville and Salem County, you have to lower these flood insurance premiums. The future of our town, I personally feel, is at stake. And as a realtor, and I've been a realtor since 1985, I am so sad and so depressed about the flood insurance issue and our economic issues that I think it's the final nail in our coffin with the flood insurance issue. I hope I'm wrong. I hope things will change. But the only way things are going to change is if you contact our congressmen and senators. And don't contact them just once. Contact them once a week. By a phone call, their phone numbers are on the back of the agenda. By a fax, by an email, by writing a personal note to them. That is the only way that anything is going to change. So right now, I would say the official part of the meeting is over. If you want to mingle, talk among each other, come up here and talk to these professional people. And I want to thank everybody for coming tonight. Thank you.